Hey everybody, good morning. Good morning. It's almost 8:30 in the morning on November 11th. It's Veterans Day here in the United States. And what I'm going to do is I'm going to take a look at the S&P 500. I want to take a look at at what happened yesterday, and just to kind of make some acknowledgments. And before I get into all of this, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So let's go ahead and move on into the chart. This is going to be about 20-25 minutes here. What I'm going to do is I'm going to take a look here at the S&P 500, basically from the beginning of the year. And admittedly, I was wrong on where I thought the direction would be going into yesterday. Going into the day before, I was right. So basically, let me just kind of recap what happened. So we shorted the S&P right here, and actually we shorted the Dow because the Dow, that was one that had recovered significantly, and so I felt that the greatest risk to reward was shorting the Dow at the end of the day on that would have been on Tuesday, and Wednesday was basically this bleed that we had here. We didn't go to new lows, and we stopped here. And I created a video, I believe it was Wednesday. We were talking about there being sort of like an ending diagonal that was forming there. That's one of the reasons why we closed our Dow position. We actually closed that. And usually when we do like big shorts of of indexes and things like that, we don't really use options. Like I've got some longer term spreads and things that I've got open, but we typically only use like ETFs to short short Dow Jones, short the S&P, short NASDAQ, and that's what we were in. So we got into SDOW when we got to the end of the day. We were able to capture about 6.5% profit on that. And of course, I was really expecting to see that follow through here. That didn't happen. So what I was sort of forced to do, and what I typically do, is I tend to, look for opportunities that are presented during the day to kind of make up what was lost on any equity trade that I'm in, and I was able to actually capture some significant plays. We were able to get several trades that were over 100%, a lot of them which were like 65%, during the day when we had that continued rise during the day after we kind of broke out above this 39.15 level. And I'm using an asset here that is closer related to the actual SPX index versus what I usually look at, which is either the SPX cash index or the ES futures. And the reason why I'm doing that is because I really want to focus on where things are from a more macro perspective, and so I'm looking at here from the top. So again, I'm going to bring up my tools here. I want to point out and maybe provide a little bit of evidence as to where I think things are things are heading here. And I think we've got a series of ABCs all the way down. So what I'm looking at here is we've got an A, we've got a B, and then we've got a C here. I'm going to change my degree on this just a little bit, just so that it looks a little bit better. And then from this ABC, again, we've got another ABC off of this, a big A, a big B, and a big C. And in each of these, we've got a rally that is attributed to this. From this low here. I'm just going to kind of pinpoint this and just to point out the rallies that we've got. And I'm going to kind of try and change things a little bit so it's not so intrusive on this. I'm going to take out the background. I'm going to go ahead and make the line white, and I'm going to decrease the opacity on that just so it doesn't take up a whole lot of visual real estate on the chart. So that was a 13-point rise. What happened after we had a 13-point jump on this? Well, obviously we went to new lows. And this was probably the biggest wave, and I think it's going to continue to be the biggest wave that we've got. All right, so we've got, an A here, and then we've got a B, a little bit of a rally there, and then we went to a new low. And then, of course, in that we had another rally, right? So from this low right here, what kind of a rally did we have? We had, again, about a 10% rally. And then from there, let's just go ahead and take a look at this. From this C, we had already counted this as an A, a B, and a C. All right. Now, the rally that we had on this off of this major low down here was actually pretty significant, right? This was a huge rally, about 19%. It's the biggest rally that we've had all year, right? We had 13% way back here in in late February, early March. We had a decent rally here at the end of May, and then we had a good rally here. Basically lasted through the entire month of July and probably the first half of August. What happened after we had that rally? Of course, we had another significant move down. Okay, now what I'm building here is a case where we're basically working on a complex expanding diagonal. We've been talking about this for months, and I think it's just now starting to become even more clear that this is what's going on. However, we have to realize that what I was originally looking at as a move down to 3,000 to 3,200 is likely not going to be the case here, because on these downward moves, right, from the top here to the low here, that came down about 15%, right? And then we had another one where we had a big move down here. That was negative 21%, right? So that obviously is bigger than this first move that we had here. And I think right now we are in that last move. Looking at this, we can count this a number of different ways, but from up here, we've got a nice 1, 2, 3, 4, and then this 5. So this was our fifth and final move there. I'm going to try and put this on a smaller degree because, of course, this is on a lower degree. And this is, again, in my opinion, just the A. We're working on the B, and then we're going to work on the C. And, of course, now that things have kind of resolved and we created this higher move here, wave C is likely not going to go as low as we expected, but I do believe we are going to get this wave 5 here. And more than likely, as far as geometry is concerned, it's probably going to stay in line with this trend line that we have right here. And likely, again, we're going to be working on this in terms of this falling wedge, right? So we're looking at this from a little bit of a different light. But where is wave B going to end? So if we've got 5 waves down, right, we're going to be looking for 3 waves up. Where is this going to end? Well, Elo on the server has been talking about a move to, maybe 4,100. What I want to focus on, at least for the moment, is the fact that from this dominant pivot high here to this dominant pivot low here, we are kind of at the 618 right now. Now, does that mean we're going to reject here? Probably not, right? So because based on this move right here, it looks to me like we've basically got this wave B that could extend all the way up here. And this goes into next Tuesday at about 41.30, and that's going to be at the 786. Now, obviously we stalled here because we have the 618 to contend with right here. We'll call it an even 4,000. From that, again, if we break through that, and it looks like we probably will, and it may happen today, we're going to have a quick move up here to about 41.30. Now, what's going to happen there is we're going to have a lot of bears that are going to kind of capitulate, right? So that's going to be what's going to fuel that quick move up to, again, that 41.30 area. And again, we're looking for potentially that to occur on Tuesday, if that is going to be the case. So we have potentially 3 trading days where we could be continuing to see a little bit of an upward tick. Now, if we reject here, our target's going to be still about 3,300, right? But if we reject at the 786, chances are pretty good we're not going to hit that negative 236. We talk about trades like this all the time, where if you're looking to get in, we've got an A, a B. If this is the C, right, if this is done, now I don't believe it is, but if this is done, I'm going to try and clean this up here, right, then our target would be the negative 236. Because again, we talk about a 618 rejection, right? We talk about these kinds of trades pretty frequently where we're looking for 618 to the negative 236, which would mean that it does go beyond this lower trend line. But if we do go all the way up here, again, if we do make our way up here by next Tuesday, we're going to be looking for that final 1, 2, 3, 4, 5. Now, where is that going to land? Potentially by the end of the year. And again, going down here to 3,400 would make a lot of sense. So this is where I think the market is trying to go. And I say this is where I think it's going to go because nobody knows for sure that this is exactly what's going to happen. But what I can say is, this move right here, you would have to stretch in order to make this look impulsive, right? If you wanted to try and dig 5 waves out of that, you probably could. And again, if I wanted to kind of be my own devil's advocate, I would count this as a 1, 2, 3, 4, 5, right? So if I wanted to, again, be my own devil's advocate on this, I would count that as a 1, 2, 3, 4, 5. That's a big expanded flat into the 2, but you could count 5 waves out of that if you wanted to. And if you were going to do that, well, this move down here would be your wave 2, and then we'd be looking for a significant wave 3 that would be going well beyond this 4,100 level. And so again, devil's advocate here. If this is a 1 that completed roughly here, and then we go down for this wave 2, we can see where our wave 3 target would be, and it would be all the way up here at about 4,500, right? So I'm expecting a move to 4,500, but I'm not expecting it until next year. I'm looking at potentially March, April, May next year before we get that move up. So that's kind of where my thoughts are on the S&P, looking at this geometrically from the beginning of the year, right? So, and again, if I wanted to take this same trend line and go all the way back to the beginning of the year, we're still finding ourselves, at an area where we've got, significant resistance overhead, and it has been all year. At some point, that resistance level will break. At some point, it will. I tend to believe right now that it's not quite done, right? And maybe it is. We'll take it one day at a time, right? This is where where we take our day trading to the next level here to try and recoup any equity losses that we have on any short trades. But fact of the matter is, we were talking about Meta the other day. We were talking about how that has potentially bottomed. We were buying that below $100. And so far, obviously it did very well the other day, right? It was up like 6 or 7%, even after Meta decided to lay off 13,000 workers. You've got all of these different companies that are laying off thousands of employees. So, even though we have a decent market movement, doesn't necessarily mean that we're completely out of the woods here. So this is where I think the path is for the rest of the year. We could reject here at 4,000, right? That would be the 618 of that entire move down from back here in mid-August, right? So we were talking about, again, this huge move here. It was a 19% move, right? And when we rejected that and went to new lows, this internal retracement of this entire move down, we're at that area where if we're going to reject the 618, we would have done so yesterday or overnight, right there at that 39.84. Again, we'll call it an even 4,000. So if we're going to do a little bit of a pop and then we start to fall, start to look for that gap fill in SPX from yesterday. If we look like we're starting to fill that gap, and especially if we get down below 3,900, I think the chances that we have that we've completed this correction and we're starting to move down for this larger wave C to complete the 5th wave, I think that would be underway. So what would that then mean? So if we do go down to 3,400, what is going to happen from there? I've been talking about this in our trading room for a while now, but if we do happen to see that we do go down to that 3,400 target, let's just talk for a moment about what that would then mean. So we'll put that at 3,401, just roughly 3,400. What I'm going to be looking for is correcting this entire move here. No, I don't think we're going to go all the way back to new highs or anything like that. Let me put this on arithmetic and not log scale. So what I'm going to be looking for on a move down here, I'm going to be looking for a significant move up. And likely it is going to go all the way up here to 4,300. There is potential that I could come up here to 4,500. So this would be, obviously into next year. This is what I'm really expecting to see going into next year, right? So breaking that trend line, consolidating at that trend line, and then going up, having a significant rally. And this would go into potentially April, right? So yes, I do expect we're going to have a significant move up. Now, that is a significant rally that is in what has been for the entire year been a bear market. What is this going to create though? This is going to create a nice V-shaped recovery, and that's going to fuel, again, when we break through this trend line, it's going to fuel a significant rise higher. Now, if we do break through this trend line here within the next few days, then I won't abandon a move down here to new lows, but I would expect at some point that we are going to come back down here to at least the 3,500 area, and then potentially down here to the 3,400 area. But if we reject here, I do think we are going to go lower, right? I think we're going to go lower than that 3,400. We will determine where that pivot is going to be when we get there, in determining where we're going to rise to. But by the end of the year, I am going to be looking to get into some equity positions that are going to be good. So we'll find all of that information as the days go by. Things so far are still looking rather corrective. Unless, of course, the weird 5-wave up that I was just outlining. If that is the case, and then this is the wave 2, then, of course, we know that target's going to be about 4,300. So, again, if we break above that 4,100 area, just remember that if we break through 4,100, chances are really good that we're going to go to 4,300, right? So, from a support and resistance standpoint, we've got this area right here that's going to be our significant resistance, right? So that was after a decent move down, we had a retracement and a significant rejection, right? So that is going to be a level of interest. If we break up above that 4150 area, and we're talking SPX, we're not talking about ES here. ES is going to be just a little bit higher, maybe 10, 12 points higher. If we break up above that 4155 area, we're going to go to that next level, which that next level of significant importance is going to be right here, actually. I would go to the wick, but as I'm looking at this and drawing this, I'm looking left, and I'm seeing significant support and resistance in this area. So actually, let me just color this green so that it's easier to see. There is significant support and resistance in this area, and I'll just go ahead and point out some of these that I can see that are significantly important. So that's going to be this area right here. Lots of resistance right there. And obviously we have some resistance right here, followed by some support in this area right here, and a little bit of resistance we can see right there. So there's already some confluence in this area that we have to you have to pay attention to. So likely there's going to be some resistance in that area. If we do push up through that 4155 area, I think that we're going to get a move up here to 4,300 rather quickly. And that's, it's a 150 point move. That's a significant move in an index. And, from there we'll have to wait and see. But likely if we do break through, being my devil's advocate, if we break through there and we get up here, we're going to get that pullback, right? And it's going to probably look a little bit like this going into the end of the year. And that would be, a sign that, maybe this whole bear case is wrong, and we would be actually going up to new highs. So again, one day at a time. Don't make, when you're talking about taking a trade on an index and you're looking longer term, it's really important that you don't overexpose yourself to too much risk, because you can have a day like yesterday, and if you were only playing options and you were not playing very smart, that move yesterday could have just completely wiped out your account. And the most important thing is to have a risk management strategy where you can pull yourself out of a hole that you have dug. And that's exactly what we did yesterday by taking some SPX calls. We got Amazon calls. We got some calls on the Qs. We got some NVIDIA calls. So we were able to find a lot of different trades and in a lot of different sectors yesterday that were able to mitigate any losses that we had. Call it hedging if you'd like. But for right now, I'm still holding some reasonable short positions, but still working on continuing to grow the account, with these shorter term trades, because fact of the matter is, currently, I still don't have any reason to believe that we are in a new bull market, right? I think there's a lot of traders that are afraid to miss what happened in March of 2020. Fact of the matter is, this whole move down looks nothing like 2020, right? So we can go back there, we can take a look at it, and you can tell me, a fifth grader could tell me, a third grader could tell me that this looks nothing like what we are going through right now. They just don't look the same, right? This was a huge capitulation move that came out of nowhere, and then of course it rebounded, right? This whole move here is very natural. It's a healthy correction, and because of that, I still don't have any reason to believe that we're done correcting yet. Yes, I am basing a lot of this based on Elliott wave theory, but for right now, all of the rallies that we have had year to date have been sold into. And so until that changes, I'm really not willing to change my theory too much. Nor am I willing to be too emotional over, over a one-day rally, right? Keeping in mind that it wasn't that long ago that we were talking about the largest two-day rally in a very, very long time. We moved up 6.5% in the course of 2 days, and when that happened, I said, yeah, this is great that we've had this massive rally, but we're still in a bear market. And what ended up happening, we ended up going down to new lows, right? So we are having a significant rally right now. And again, it could last still for a couple more days. It's possible, just for the record, it's possible that right now we do nothing but just move sideways until next Friday morning. The importance of next Friday morning, and we talk about the Love Shack every once in a while. So let me just check my time here. So I'm a little over on time here, but we do talk about the Love Shack every so often. And what the Love Shack is some math equations that I'm working through to maybe change up a little bit the max pain theory that we currently look at on options. I'm starting to see some trends, in that, but looking at that very closely, and there's over $100 million that are in options expiration for next Thursday. And max pain, for the record, for next Thursday, and actually it's the Friday AM, but really they stopped trading on Thursday at 4 p.m. That was right around 4,000. So it's very possible that we just grind sideways here for the next 4 trading days until basically this time next week, right? So because those options will expire at 9:30 in the morning next Friday. So keeping that in mind, that we may just move sideways on that. Elo's talking about, the bear moon also is next Friday as well. So if we just continue to grind sideways for the next few trading days into next Friday, I would be okay with that. That would actually increase my confidence that we are going to be going to new lows, and actually lower than 3,400 by the end of the year. How low are we going to go? We're going to have to just, again, take that one day at a time, and make determinations as they go, right? There's no reason to force yourself into a trade. There's no reason to overexpose yourself because you're confident on trade. What I tend to find out is when you are the most confident is when you are going to be the most wrong. And, that's what happened to me yesterday, right? I was pretty confident that we were going to see a continuation to the downside. We had a great trade on Dow Jones. Again, that was like a 6.5% day, right? In a day, 6.5%. An equity is really, really great. And again, while I was expecting continued move down, I was reducing my risk. I got out of my Dow position, and then I didn't enter short until 8:30 in the morning yesterday. So while I did kind of get caught, and that position is still a little underwater, overall I'm still okay. And the reason why I'm okay is because because I've been doing so well on this downtrend, for the year, I'm still up a significant percent. So I'm not going to let one day kind of get me down. I'm going to continue to look at it without emotion, looking to see again where the end is going to be here, and then making a play based off of that. All right. Well, that's all that I've got for right now. Hopefully this video did help you. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. If you need access to our trading room, if you need access to our indicator that we use in all of our trading, you can find all of that information on BitDoctor.org. And of course, last but not least, wherever you are in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone. Have a great day.